truth.
Yo, good morning, everyone, and welcome to the Morning Market Report. Guys, we got a short show for you today, but I needed to go live so we could talk about the PCE data that just came out today. Some telltale signs in there of where we are as an economy as a whole. And got news for you. Most people can't afford to even live life right now. That's why we're buying Bitcoin. It's the path to freedom. We're going to be cutting it short today, heading over to FD White. He's live today. You don't even have to go anywhere. It's going to redirect right to them. We're going to go check out FD White and Alex Crypto doing a collab together. So, got to support the fam. So let's go ahead and get into this data, guys. Let's go ahead and knock it all out. You guys know what time it is. Get your notebooks out. Class is in session. Let's go. Good morning, everyone, and thanks for joining us here on the show. Let's just jump right on into the news, the data. We got a lot of stuff to unpack here. We'll talk about where we're at with Bitcoin right now. We'll take a look at Ethereum, but I want to make sure that you guys are aware of the data that came out today. We are getting some sell-off in the market for it, so let's go ahead and jump over there. Good morning to everyone in the chat, though. I appreciate you guys being here. Looking here at the metrics on Into the Cryptoverse. First of all, guys, current risk indicators sitting right now at 31.2% risk band still. Crypto market cap total sitting at $3.786 trillion. Trend on this is sitting at 4.275 trillion. We are currently undervalued 11.43%, moving further away from that median line that we were so close to crossing not that long ago. Current risk band on Bitcoin sitting at 52.6% risk band. Remember, 70% is our take profit level. So that is what we're watching right now, is that we're about to go into a 3x DCA level on Bitcoin. Just out of curiosity, where we're at with ETH. Let's take a look at that. ETH is at a 30% risk band right now. However, when we do look at this, we do use a 30-day deviation for the moving average. Let's see what that one's sitting at, 69.8. So we are right at the 30% take profit level on Ethereum as of right now, guys. Looking at the Bitcoin dominance, how are we looking on that? Bitcoin dominance today with stablecoins sitting at 57.5%. Take stables out, we're still sitting over 60%, 61.81%. I want to show you guys something. You guys may be interested in this. It's pretty interesting. Check it out. Your alt season index, we're now at 61.2. What does that mean? That means we're getting closer to the 75 for alt season. I do think we do have a parabolic run at the end, breakout, but yeah, it's we're getting there. We'll have to see what happens with altcoins. If Bitcoin continues to sell off, I do think we'll see the alts dump. And I do think a lot of this was money flowing into Kronos and Pith recently, giving those alts a little bit more number. Because remember, it's versus Bitcoin on all of those. And currently, right now, we are sitting with 19 out of the top 50 with less of an ROI than Bitcoin. That is what this is based on, is when it's 75% of the top 50 with an ROI greater than Bitcoin for the past 90 days. That is when we are looking at, that is when we are getting into the actual alt season. So appreciate you guys all being here, though, man. Shout out to Dylan VA, by the way. Dylan VA this morning, he won the YubiKey on Good Morning Crypto with BC Port Corp. So congrats to him. Well, we got the chat over here. Crypto Billy's in here. JR. Lunar Beaches, he said, I'm not as broke. I'm broke AF and about to have a kid. Actually, not quite as broke AF, thanks to Piper and the alumni. Yeah, we appreciate you, man. We pulled together, guys, as a whole team, as a family. We were able to pull together well over $800 for LBC. So shout out to Lunar Beaches Crypto and that new baby. Let's go ahead and jump over into the Fear and Greed Index, see where we're at there. On the Bitcoin Fear and Greed Index, currently sitting at 50. We are neutral right now. On the Ethereum Fear and Greed, we're sitting at 53, also in neutral. Shout out to LBC. If you guys missed this post, you guys need to follow LBC on X. He put this out this morning talking about key economic data today, high impact core PCE, bullish case, and he talked about this. But a couple of things that are missing in this, because it came in normal. We'll talk about that. It came in neutral as expected. However, pause for effect. Um, we got some other data within that data that said, hey, overall, things are still expensive. A lot of people are buying, choosing to buy luxury goods, items like that. Non or durable goods was up, but then the non-durables was down, and we'll talk about what that means. Per the thumbnail, per the headline today, guys. Looking at this 24-hour liquidations on the charts in the past 24 hours, 136,074 traders got liquidated. Total liquidations coming in at $477.5 million. Largest single liquidation was a Bitcoin trade. It was 4.38 million. Looking at the crypto bubbles, guys, you can see a lot of red on the weekly, the daily, the hourly. Bitcoin currently down 3.5% on the daily right now at 108,931. I still think $100,000 is the level to watch. We'll talk about that chart in a minute. Ethereum's down 5.8, XRP's down 5.6. Dogecoin's down 4.1. Cardano's down 5.6. Guys, Chainlink getting wrecked, down 10.4% on the daily right now. Chronos down 16.4. That run is over. So there you go. Cycles of pumps, right, guys? That's what we've talked about here for alt season. Alt season cycles of different sectors, not the whole thing. But let's go down here and look. I want to show you Pith. Where you at, Pith? Come here. It's all the way down here at number 68. It's up 16 spots to number 68, up 32.4% on the daily, almost down 10% in the past hour. That news also fading away quickly. Looking at the U.S. market, let's give this a refresh and look at the TradFi side. How's the stock market doing today? Dow Jones is down about 0.5%. S&P's down 0.75%. The NASDAQ is down 1.17%. Russell 2K small caps about flat and neutral. And the VIX is over 15, up 10% today, moving to the upside. Europe markets overnight were kind of red, except for the FTSE. Looking at the Asia markets, Shanghai and HSI was green, but the India Nifty 50, the Japanese market, all to the downside move there. 10-year yield making a bounce again, because why? It hit 4.2%. Why wouldn't it bounce back up and turn green again? That's what we're seeing there. Energy sector, mostly red except for gas there. And then gold is rallying back up again, 34.87 on its way to $3,500. Silver is above $39 an ounce, but it is taking a very, very small pullback today, about flat. It's flat. Copper's up 0.75%. Platinum and palladium both pulling to the downside on the morning market here. Let's take a look at this economic calendar and let's talk about the so what here. So this morning we got core PCE that came out, personal income, personal spending. Core PCE was at 3.3%. Consensus is that it would be neutral at 0.3%, forecasted to be a little bit better, 0.2. No, it came in as consensus, previous neutral 0.3%, right? Personal income was at 0.3. Was expected on consensus to be a little bit higher. Why did it come in at? A little bit higher. So we're seeing that personal income went up month over month. Core PCE stayed the same month over month. Personal spending, though, this was previously 0.3. They changed it to 0.4 on a revision for the previous personal spending month over month. Now it's at 0.5%. So we're seeing personal spending is going up. People are spending more. Doesn't necessarily mean that they're buying more. Does that make sense? They're spending more. They're buying the same thing. So I'm going to break this data down. I've got a chat GPT breakdown on all of this. Pam did the digging for me, and we'll talk about what that means and why I said most people can't afford to live life right now. So I said, what happened? And she broke it all down. She said, here's the breakdown of that report. Personal spending rose 0.5% in July 2025. That's a step up from the June's revised 0.4% increase, and it marks the fastest pace in 4 months. Total spending hit about $20.8 trillion on an annualized basis. Durable goods, big ticket items like cars, appliances, and furniture rebounded hard, plus 1.9% versus the negative 0.8 that we saw in June. Services like housing, healthcare, travel, and restaurants, it kept steady. It was neutral at 0.4%. Non-durable goods, check it out, guys. Non-durable goods, groceries, gas, everyday items barely grew. It was only up 0.1% versus almost a full percent prior in the month. So let's talk about what it did down here, because I had her break it all down. And she said, That's what she said. She said July 2025 consumer spending breakdown. Uh, Personal spending again 0.5% in July, $20.8 trillion annualized. Okay. So when we're looking at this, what that means, consumers are still opening their wallets. They're confident enough to buy cars, furniture, vacations, and services. This is why total spending looks strong. But they're pulling back on the essentials. The near stall and non durable signals squeezed budgets for day to day items like groceries, gasoline, and consumables. Inflation in food and energy is likely forcing trade downs, cheaper brands. I'm going to get the generic brand at Aldi's, right? Cutting back. Gas prices are flattening or dipping, may also explain slower growth. But the bigger story is consumer prioritizing their wants, durable goods and services over needs, aka non-durable. Savings are also shrinking. Savings rate is at 4.4%. Households are leaving themselves with less of a buffer for emergencies. That makes this consumer strength look more fragile than it actually appears. So what to it all? Retailers tied to durables and services, aka cars, travel, leisure, they win in the short term, but grocery chains and consumer staples may show marginal pressures. The strong spending is propping up the dollar, but weaker non-durables point to a potential cooling later this year. And then Bitcoin and crypto risk on positive short term, but consumer fragility plus low savings equals a setup for a volatility if the shock hits. So I also asked her, so what is the reason for this high end item purchasing versus this non durable goods slowdown? And she said, excellent question. You're digging into the heart of consumer data. That's what we try to do here at Piper Academy, guys. So there's two Americas in the spending cycle, right? We have high income households. These groups have stronger balance sheets, higher stock portfolios, higher home equity, more access to credit. They're less sensitive to the inflation in the food and the gas. They can splurge on vacation, so on and so forth. Middle and lower income households are showing stress in non durable areas, food, gas, and consumables. The near stall and non durable spending suggests that day to day essentials are hitting affordability limits. They're maxed out, guys. These groups tend to spend larger shares of incomes on necessities. So when inflation stays elevated in food, rent, and gas, they cut back or trade down. I'm not going to get ribeyes anymore. I'm going to get flank steak, and we're going to have fajitas tonight. All right, little skirt steak action here on the grill. All right. Inflation distortion, the nominal dollar effect. If durable goods are more expensive, then spending totals will rise. Guys, this isn't saying that people bought more cars or that people bought more luxury brands. It's saying that they spent more money to get those, and the rich are still buying those things. People are using it as a reward system also, and I'll go over that in a second. Big ticket treats, right? So just because we're seeing a higher number doesn't mean that the economy is growing back again. It means that inflation is staying sticky and people are spending more money for less items than they used to get. So part of the story is inflation lifting the dollar value of high-end purchases, not necessarily more units being sold. There you go. Behavioral shift, prioritizing experience and big ticket treats. There's evidence that consumers are choosing to cut back on everyday items to free up money for big or memorable purchases. Example, skip restaurant meals at home, but still book a vacation. Delay brand name groceries, but finance a car upgrade. This is the classic squeezed middle response. Luxury purchases become a one-off reward, while necessities are getting trimmed and substituted out. So, chance for a rate cut, guys, on this news today. Let's go here and take a look at that. It is now sitting at an 89.2% chance of a rate cut in September. It does look like we are getting that 25 basis point there. And then let's go and let's look at the chart. So actually, let's go over here. Solo cam. All right. All right. So I got a Steve. Felt it coming. I didn't want to blow your guys' eardrums out. So yeah, so what we're seeing on this data, guys, is yeah, it was neutral, but when you dig in a little bit lower, dig in under the surface, just go under the surface, you'll see there's rotten soil that this is growing out of. And so right now, we are seeing that people just can't are choosing not to, even if they can, not afford, not choosing to buy the things that they normally buy. They're doing a reward system for themselves. You know what? I'm going to live some type of life, even if it means more debt on a new car, right? Um, So we are seeing that in those numbers. So yeah, while they come out and they go look good, you look all over crypto Twitter today, and everybody was like, "This is bullish. We came in neutral." Blah, blah. No, it's still a 0.3% inflation rate on PCE. The expenditures are still static. It didn't go down. Lunar beaches. Don't get me started. And when you dig a little bit deeper, you'll see that that people are cutting back on the necessities. Day to day is getting tighter in the spending world. So let's go jump into the Bitcoin chart real fast before we head over to FD. I want to show you guys what's happening here. We talked yesterday about coming up on that 1-to-1 line at 113,202. Guess what? That was our rejection point. We're now coming back down into the phase two, and I'll bring this into focus here so you can see these are trend based fibs. And we got, phase one up here. This was our retracement levels, right? Come down, rejection off the golden pocket, heading into the phase two cycle. What I'm watching here, honestly, is for us to come and go all the way through this thing. Now, it's not going to be a straight down line. I think we'll get a 50% rejection, a golden pocket rejection, a rejection of the platinum pocket. I do think we're heading down to $100,000. Why do I think that? Well, that would be because of this over here. And we've talked about this. We're coming back in on the bull market support band, the daily dynamic reactor from Chart Prime, and that 52-week simple moving average sitting right there. You can see when we break this, we go down to there. So I'm going to keep watching that. Currently, this is coming in right about 93,000 on the 52-week SMA. But the bull market support band, once this crosses and this green goes over this red, guys, we've seen historically that there's a pullback there anyways. Let's go over here and take a look at the swing fail pattern that we had on the weekly. That 20% pullback there on average, which is what we get on the swing fail pattern, coming in right about $97,000. I think the $100,000 range, which would be in line with the liquidity sweep of this previous area, would be the area to watch. At the same time, if we do go down to that level, guys, that is our line in the sand. It's going to be $93,000 Bitcoin. At the end of the day, let's just go over here and we'll talk this out. You can see that Bitcoin showing areas that we need to be watching to get in and buy, right? But at the end of the day, just continue to DCA. We have the Piper plan in our Discord. It's a really good breakdown system of weekly buys based on risk levels, and it's a dynamic DCA. It's not the same amount every week. Depending on how deep it goes into the wristbands, the multiplier on our DCA plan. So if it's $25 a week you put in Bitcoin, it might be $50 or $75 or $100 based on the multiplier of the wristbands. And at the end of the day, we've gone back and looked at it from November 21st, 2021, and looked at starting your dynamic DCA at the top of the cycle of 2021, and you would still be up way up like 270% right now. So, yeah, that 52-week SMA is dope, Lunar Beaches. That's my boy over there, Lunar Beaches level too. I used to use the 50, but now I like the 52. He's right. The 52 is beautiful. It's beautiful. There you go. But yeah, so at the end of the day, guys, if you're not buying assets, and this is a very important thing to point out here. Let me see if I still have this. I think I do. Yeah, assets. Let's jump over here. So the current bull market is historically strong. This is from the Kabisi letter 16 hours ago. 70% of stocks in 3 of the 4 major cyclical sectors are now above their 200-day moving averages. Every time this has happened since 1953. Where is my ticker, sir? Can I get my ticker back on there? Thank you very much. On the chart. There we go. Every time this has happened since 1953, the S&P has seen strong gains for the following 12 months. While large cap tech names are increasingly driving the market, small caps are starting to catch up. The breadth of the market participation has always been a key indicator of the sustainability of equity rallies. Momentum appears to be historically strong. So at this point, guys, it's these assets that are going to be keeping people above that level of, hey, I can't afford groceries or my favorite brand names anymore. That's what's going to give people that ability. So if you guys are thinking about, hey, I need to cut back somewhere, whether it be a little bit less driving, no weekend trips, whatever, because you're trying to quit spending your money on a new car. If you got a little bit of extra money and your savings is, being taken care of first, because you got to have emergency funds. Um, think about your equities and what you're investing in, because if you're dollar cost averaging in the long run, you're going to come out better. And then maybe the next time that we have this cycle of economic woes, you'll be able to actually live life and not be the people that are cutting back on their groceries and their gas and the day-to-day necessities. So I appreciate everyone in here joining me. We're about to go head over to FD White and Alex O Crypto. I just wanted to come on today, give you guys this update. I thought you guys needed to know it because a lot of people on crypto Twitter were absolutely talking about, hey, these numbers were good, and they're not good. They just don't know how to read the data. So appreciate you guys being here. You guys remember this weekend, low volume. You know what happened last weekend? Somebody market sold 24,000 Bitcoin. Be careful this weekend. Trade safe. Use some risk management if you're going to trade. And if you are not in our Discord for $5 a month, just click the join button below. It's $5 a month, and you get our weekly DCA drops, trade setups, a couple of classes in the Discord for members only. There's a lot of stuff in there for you for $5 a month, man. Appreciate everyone being here. Guys, trade safe. Have a great weekend. Touch some grass. Let's go head over to FT White and Alex O Crypto. When you get over there, drop graduation cash and let them know that you're with the alumni and you came to say hey and hang out with them. We'll catch you guys then. Peace, love, and profits. Later, guys.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional, damn it.
We'll see you at the next
Don't
one.
know what the fuck they're doing.
Morning market report out. 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 Out.
Boom shakalaka.
We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?